Good morning, everyone, and welcome to Reddit Revolt here on Cheddar. I'm Kristen Scholler.
And I'm Brad Smith. Today, we close out a turbulent week for the stock market as a brigade of online investors have dedicated themselves to squeezing out short sellers of GameStop. It all started on the subreddit WallStreetBets. Over a period of several months, the forum filled with wacky memes and YOLO bets decided to go all in on GameStop stock. In a short squeeze like we're witnessing now, as the price of a stock goes up, the company that initially had a short position is forced to buy up more shares, thus increasing demand and essentially pouring gasoline on the fire. As a result of GameStop's stock has shot up over more than 1,000% this year. And the WallStreetBets crew isn't letting up. The online community is stressing to members to hold the line and not sell their shares for the tempting profit in front of them, making some subscribers millionaires overnight. Now, Reddit and Robinhood have been dominating Apple's App Store downloads as new users flock to the apps for a chance at turning a quick profit.
Brad, what a week it's been. So Robinhood quickly falling out of favor with social media and Reddit, believe it or not, as the company made the decision to block purchases of 13 stocks that were trending rapidly higher, including GameStop, AMC, and BlackBerry. And this led to steep price drops as users were only allowed to sell their shares versus buy new issuances. So controversy swirling, especially when users pointed out that Robinhood had close financial ties to the market maker Citadel Securities, a sister company to the Citadel hedge fund based in Chicago that shorted GameStop's stock. Now, both Citadel entities denied any connection to Robinhood's decision. Here's Robinhood's CEO Vlad Tenev yesterday.
You know, we had to make a very difficult decision to protect our customers and our firm, but we in no way do anything but protect it. So we haven't really seen anything like this before. And to prudently manage the risk and the deposit requirements, we had to restrict buying in these 13 stocks. But customers that held them could sell throughout. Thousands of other securities and stocks on our platform were available to freely trade.
GameStop stock has since recovered from a rapid sell-off Thursday. Shares of the game retailer are trading above $300 today, and this massive squeeze and online vitriol against short sellers has led to Citron Research, one of the Wall Street most notorious short sellers, to quit at least publishing reports. Now, the firm tweeted this morning, after 20 years of publishing, Citron will no longer publish short reports. We will focus on giving long-side multi-bagger opportunities for individual investors. And if you ask subscribers, or as they call themselves, degenerates of WallStreetBets, this was their intention, to change the power dynamic in the investing environment. So it stands as a David and Goliath battle of sorts as hedge funds on Wall Street lose billions and those fortunes are falling into the laps of everyday investors playing the market like the game that it is. Kristen?
Brad, so many unanswered questions that I'm sure over the course of the next several weeks or even months, we might get a few more answers to. We know investigations currently underway, hearings on tap, certainly coming out of Washington among lawmakers there. And the new head of the SEC, Gary Gensler, is going to have a tall task ahead of him. How does he basically look at the little guy and the hedge funds in this particular scenario? And then, of course, did Robinhood have any communication with Citadel when making this decision? And what do these limited trades even mean? I mean, who can actually make a trade right now on Robinhood? So many questions that we have and we'll be diving into throughout the next 20 minutes or so.
Yeah, that's right. And just to add on to that, this is a totally new era that we may have found ourselves just entering into, especially with the social environment and the amount of people that are willing to openly discuss some of the positions that they take, especially if it's a company that many of them want to get behind. And within these Reddit forums, or even as it's permeated into other social media apps, such as Instagram, you're seeing some of the investing meme culture move over into Instagram and into Facebook. And so with that in mind, you've got new entrance, and this perhaps is a big silver lining to the environment, is that you've now got people, the next generation of investors, that are saying to their friends, hey, let's talk about this. And if that's something that becomes more popular, that's exactly where you see even more of this strength going forward in the equities and options market, in that people are going to want to be interested and view it as a methodology to grow their money over time. They will become more invested in some of the companies that we don't even know about that aren't publicly listed right now, some of the private companies. By the way, Robinhood is a private company. And so the larger question too is, for a lot of the investors that they've been able to take on over the past 12 months, as they've seen accelerated growth during the pandemic, people have received stimulus checks. Some of them have put that money to work in the stock market and watched their investments in their portfolio. And then on the backs of this most recent stimulus check that's going out to Americans of $600, while there's a debate going on in Washington for even more stimulus perhaps going out to Americans, some of them decided to put that money, that $600, to work as well. And so the huge question is, where do they place their own interests and on which platforms, given the fact that they've seen not just Robinhood, but also Webull and also TD Ameritrade, some of the major retail platforms where these investors place some of their time of the day looking, checking their portfolios, where they're going to continue to ultimately engage with the broader equities and options market going forward.
And of course, we already see some user reports on brokerages like Fidelity and TD Ameritrade today, and the day is young. We still have just about 5 hours left in the trading session, of course, with the market closing at 4 p.m. So who knows what it will bring, but viewers, we got you covered for the next 25 minutes. You want to stay with us. Up next, we got more of our special report, Reddit Revolt, on the other side of this break. Welcome back to Reddit Revolt on Cheddar, everyone. We are already seeing the tremendous impact that WallStreetBets is having on the investing environment, as famed short seller Citron Research says it will no longer publish short reports, instead focusing on long-term investing. For more on this and the continued activity that we're seeing around GameStop from the retail community, we're joined by Jake Wujastyk, Chief Market Analyst at TrendSpider, and Dan Egan, Managing Director of Behavioral Finance at Betterment. Guys, it's great to have you both with me today. So Jake, at TrendSpider, you do a lot of technical analysis. What are the charts telling you about the path forward for GameStop?
At this point, it's really hard to even look at the charts and see anything that's foretelling. The only thing that you can really look at right now are Fibonacci extensions. And because we haven't seen prices like this in ever. And so when you're looking at the chart, the only prices you can really look at are the previous prices we saw a couple days ago. So when we hit, I think, over $400 on GameStop, we can then look at those areas as possibly retesting those zones. But before that, it was really looking at these Fibonacci extensions, which become a self-fulfilling prophecy when everybody is looking at these above. That goes for retail traders who look at technicals, but it also goes for the bigger institutions that are looking at these levels as well.
An extremely volatile stock, as our charts show there over the course of the last 5 days. Dan, I want to bring you in as well. Explain the behavioral component behind this. What is driving some day traders, presumably day traders active in this Reddit subgroup, to drive up these prices?
Time and attention. So one of the first components we have to be very clear about is that right now, people don't have the ability to go out and interact with each other. We can't go to ball games, movie openings, bars, restaurants. So we're looking for connection and entertainment in other places. And the stock market is one of the few things that we can all join in on. We can participate now that there are zero cost commissions and you can have a smartphone in your app to do it. So this is the place where everybody's attention is going to. That's being reinforced by social networks and media boards, et cetera, to say this is where the attention is. This is the hot, interesting thing right now for a large number of people who it wasn't before the pandemic. One of the other things I think we need to be aware of is that it's a little bit like an attention thing in that we need novelty. We need excitement. It's very easy to go from 30 to 60 and have 100% return. That's a lot harder as the price goes up. So already we're seeing these sort of rotations into other stocks that are similar but offer a greater kind of entertainment reward.
I think it's interesting there, you note excitement versus actual money making per se. Of course, we have to wait to see how this all plays out. But Jake, I want to bring you in here as well. I mean, retail traders actively entering this market as the pandemic has hit since March of last year. How does this change the game going forward, knowing that so much more activity is now happening in the market with record trading volumes set this week?
I think it changes the game in a lot of ways. I mean, you've already seen Citron pretty much saying that they're not going to be putting short reports out anymore. And I don't really blame them, because that's essentially showing your hand in poker. If you're showing, I'm on leverage and I'm shorting this position, and you have a lot of people trying to take you down, that's changing the entire paradigm of how trading is happening and how these institutions are even entering positions. And, if you think about it, if you have 50,000 people that put $1,000 into the market, that's $50 billion that are now flowing in liquidity in the markets. And that's something that is really just being able to move the markets like never before. The ability to easily go in and buy something has always really been there with Robinhood. And the fact that Robinhood restricted selling yesterday, and the fact that these stocks still went up, tells me that this isn't just retail. This is bigger money as well. If you're restricting all of this liquidity on, or if you're adding liquidity on the market only and not adding that demand side, as Robinhood and some of these other brokers did yesterday, and there's still demand coming in, we know that it's not just retail traders pushing this. This is bigger institutional money as well, because AMC, I mean, these are moving without that help of the retail trader yesterday, and I guess they're opening it up today, but yesterday for sure.
I think those are really good points. And with the new SEC head on the way in, we'll wait to see whether or not we get more transparency as the average American on order flow and who's actually making trades on a given basis. Of course, the thing with Reddit is that it's anonymous. And so we don't actually know who is pushing money and who is making these comments on the particular platform. Dan, when it comes to the behavioral side of things again here, the fact that Robinhood made this move yesterday to suspend trading, upsetting many of its users, what does that do to the user? Does it cause them to turn away and try other platforms, or do you think they keep coming back?
I definitely think it hurts their brand. It's very hard to call yourself Robinhood while acting the exact opposite way. I think that moving forward, one of the issues is that a lot of the brokerages had to do this. It wasn't just Robinhood. There were a number of other ones that had to stop the trading. I think it does remove the veil from a lot of people's eyes that this is serious when things get big. And a lot of these players are going to have restrictions. Previously it might have been thought of as fun or a game or an app that you were playing with, but there are some hard stops when things get serious. So I think there's a bit of disillusionment about the new economy, or at least the new finance economy, that actually when push comes to shove, the big players will push back in very specific ways, and they hold a lot of the infrastructure.
And Jake, it's not just GameStop or AMC, by the way. We're talking Bed Bath & Beyond, Express, Costcorp, which basically sells headphones and screens, among other things. But some of these other small companies as well, Beyond Meat, another highly shorted stock, but one that necessarily hasn't jumped onto this trend of day trading just quite yet. What do the charts indicate in terms of other stocks that might be on the cusp of going the way of GameStop and AMC?
Yeah, so, there are stocks that haven't even moved yet that are really showing some short interest. But at the end of the day, the charts are really only going to tell you where price can potentially go. GameStop was a great example where there was really nothing on the chart that would have told us GameStop was going from 35 to 400 within a week and a half, whatever it was. And so this is where you kind of start to see price discovery. And price discovery really kicks in when you're at new levels. You've never seen these levels on a stock. So the main thing that I like to look at, especially for these stocks that haven't really moved yet, are just supply and demand zones. So VWAP, areas where there's a lot of buyers above. So let's say that there's a stock at $10 and it's got a high short float. And a couple months ago, there were a lot of people that loaded up at $20 a share. When the price goes up to $20 a share, all of those people are now back to break even who were just dealing with a 50% drawdown. So those types of people are going to get back to break even. And then that's where you kind of get this deciding moment. Is the stock going to continue to go up, or are all these people who are just getting back to break even going to add supply onto the market and allow prices to drop from there? On top of that, all of these companies that are going up are in a very bad financial situation. So they're going to take advantage of being able to put shares on the market from this liquidity and raise some capital. So this allows them, it's almost like a different type of bailout. It's like it's like a bailout from a short squeeze. All of these companies now have the ability to raise capital where they wouldn't have been able to do that because the liquidity wasn't there before.
And does it change their business models going forward and take them off of the brink, for instance, like AMC? So a lot to still digest here. We got to leave it there, guys. That's Jake Wujastyk, Chief Market Analyst at TrendSpider, and Dan Egan, Managing Director of Behavioral Finance at Betterment. Thanks, guys. Okay, coming up, we're going to explore the legal implications of Robinhood's choice to halt trading in certain stocks. Reddit Revolt continues after the break.
Welcome back to Cheddar's Reddit Revolt. Social media went into an uproar yesterday after Robinhood banned purchases of a number of different stocks, including GameStop, AMC, and BlackBerry. A few other trading platforms did so as well. Still, investors that owned GameStop stock on the app, they were permitted to sell. Now, this led to a staggering loss in stock price, accusations that Robinhood was imposing these restrictions to help hedge funds with financial ties to the company, and even a class action lawsuit. Robinhood has since restored the ability to purchase these stocks in a limited capacity. For more on the legal ramifications of this decision and scrutiny from Washington, we're joined by Securities Attorney Nisa Amoils. Nisa, great to have you here on the day. I got to dive right in the interest of time. What's the legal precedent for trading platforms blocking stock purchases amid rampant volatility?
Hey, Brad. So this is going to be a hard case to prove any criminal activity. First of all, Robinhood's terms and conditions protect them from what they did. And second of all, it's very hard to prove that there was collusion here. It's really uncharted territory when you're dealing with Reddit and all of these, the rise of social media and the disruption of the internet. But I think the bigger point here is that we are moving towards decentralization. You have other exchanges like FTX and Bittrex that tokenized versions of these stocks that weren't allowed to be traded on the brokerages. And that is the connection. That is why Bitcoin is up today. That is why most of the cryptos are up. So you're going to see much more movement in terms of that, especially with the regulators are focused.
Certainly, and I want to get your reaction to the claim in the class action lawsuit that Robinhood, quotes, deprived retail investors of the ability to invest in the open market and manipulating the open market. And so in making that case, you mentioned that it's going to be difficult as Robinhood has their own protections, but what do you make of the claim?
Well, I mean, I think claims like this have been brought before, and normally it's not as transparent as it is in this case, where everything was done out in the open. So the claim about manipulation of markets has to be proven, and that's where you're going to run into terms like collusion.
Certainly. Robinhood CEO Vlad Tenev says that capital requirements for volatility were the reason for the decision. As we were watching this play out in the open, many are speculating about the financial relationship, which you mentioned as well. And ultimately, when we think about what took place, the financial relationship with Citadel Securities, which had an aggressive short position in GameStop, is the reason for the block. That's what they were speculating. Does Tenev have plausible deniability with the capital requirements argument?
Well, 70% of the trades yesterday were done by Citadel. When people pay no fees to trade on Robinhood, they are the product. Your data is being sold to these people. So the question is whether, you can just sue Robinhood or you can sue Robinhood's investors, and that remains to be seen.
Nisa, I would love to conduct a conversation on Congress in the future. We got to leave things there on the day because we know that they're going to be holding two hearings. Thank you so much for the time, Securities Attorney Nisa Amoils. I want to send things on over to Kristen, who has more on Wall Street Bets.
Thanks so much, Brad. Well, traffic to the WallStreetBets subreddit has exploded since the GameStop story began dominating headlines just about a week ago. On Monday, the 9-year-old community had 2.2 million members. That number skyrocketing now to more than 6 million as we look to close out the trading week. So for more on this, we're joined by Jaime Rogozinski, founder of the WallStreetBets page. Jaime, I'm glad that you could join us today. So you actually created this community, but were ultimately removed by the platform platform for allegedly profiting off of the brand. What's happening today? Is that what you would have expected?
To be honest with you, I never received official confirmation. So if you have additional information as to why I was removed, I'd love to have it. I was told that I was in violation of the terms of service, and that was the last communication I ever heard from the platform. I tried many different ways to get a hold of them, but that's yesterday's news at this point. I did found WallStreetBets, and I was with them since inception all the way up until April of last year. Intimately aware of the way that it works and the way that community is functioning, and obviously continue to follow it.
Okay, so it was founded, it's my understanding, on this YOLO philosophy and basically treating the market in some ways as a casino. So are you surprised by the action that we see today?
I mean, the YOLO terminology came in a few years later, but when it comes to treating the market like a casino, I've seen references by New York Times, by large publications refer to Wall Street as a casino, dating as far back as 1970 something. I think it's always been one. The difference between WallStreetBets is that the community does that in an unapologetic way. The Wall Street, these big institutions, they use fancy terms, these mortgage-backed securities, these credit default swap derivatives, collateral, whatever. WallStreetBets calls these things a bet, right? And they call it a YOLO. It's no different than what they're doing. We're just doing it in an unapologetic way. At least they are doing it in an unapologetic way.
I think it's worth noting that Martin Shkreli, Pharma Bro, as many know him on Wall Street, did briefly serve as a moderator before being convicted of securities fraud. What we see playing out on this platform right now, do you look at that as collusion and market manipulation?
I don't see the relation between those two things. We had Martin Shkreli as a moderator. Whatever it is that he did and whatever he got in trouble for, he got in trouble for. But one thing's for sure, he is a brilliant financier, and he had very insightful information to share with the community, as well as YouTube videos. So, whatever legal troubles he has aside, he was a valuable contributor to the market. As far as this collusion, market manipulation, look, I'm watching this from the sidelines. I honestly have no skin in this game. I have no positions in any of these stocks. I'm very much just passively watching this, and it's fascinating to see. I've seen arguments as to why it's collusion and manipulation. I've seen the arguments as to why it's not. It's freedom of speech, and we're not misleading or lying or dumping any stocks on anybody. Both arguments are good. We're going to see how they play out, regardless of what ends up happening. So, I can't pretend to know whether or not what's happening right now is considered illegal. But one thing's for sure, it's weird. I think that's why it's got so much attention.
So massive trading volumes setting new records across the board this week. Knowing what you know about this community that you founded and seeing some of the comments that we see on the group right now, do you think that people other than day traders are currently playing in these stocks?
I mean, they have been for a while. WallStreetBets was a refreshing place to be honest with people. That's why oftentimes you have losses that are welcome, and they're not glorified per se, but when people share them, they're welcome, and it's that honesty and that sense of humor that attracts all sorts of people. And you do have a lot of retail amateurs, but you have plenty of people that work in the industry that know what they're doing. Maybe they're also taking trades. Sometimes they're sharing insights. Sometimes they're participating in the jokes. But you do have a little bit of everything.
All right. Well, we'll wait to see how it all plays out. Jaime Rogozinski, founder of WallStreetBets on Reddit, with a community now more than 6 million people. Jaime, thank you for sitting down with us today. Okay, Brad, I want to bring you back in here because that's going to do it for our special Reddit Revolt.
That's right. Stay with us. More Cheddar's up next.